Hey family, I am Dorothy Harris and welcome back to my channel. We talk about all things business, wealth, and lifestyle. If you're looking for entrepreneurial tips, ways to build more wealth, or hey, you just want to have some fun and adventure, this is the channel for you. Don't forget to like and go ahead and click that subscribe button. I can't wait to journey with you. Hey family, I am Dorothy Harris and welcome back to my channel where we talk about all things business, wealth building, and lifestyle, and of course real estate and mortgage origination, as I am a Michigan licensed realtor and a loan officer. I wanted to bring this video to you today on a topic that I think is very highly needed and requested, and we're going to talk today about credit, how to build your credit. I'm going to use my personal scenarios to kind of give you guys some tips and tricks, but also some things that I've learned while being in the real estate industry. That way you know exactly what tips you can use to start building on your credit. So I am super excited to bring you a financial educational video today. Something that's really going to kind of help you on your day-to-day, start kind of implementing some of these skills on building your credit criteria. Now, I'm going to go ahead and start with my personal experience with credit. I totally do not mind sharing, as it definitely was a process, but I'm just super glad this will probably help somebody. So, we're going to talk about two topics. The first one is going to be establishing credit for those who don't just quite have that credit yet. And then we're going to talk about maintaining your credit for those who just maybe have had good credit before or have been trying to work toward getting better credit and just can't seem to get there yet. So we'll start with establishing credit. Now, a lot of you all don't know what it means to not have established credit. So we'll just go ahead and break that down. When you don't have established credit, that means you don't have any credit scores at all, or you may only have one. Keep in mind, you will always need 3 credit scores because most lenders, things like that, they use the median score of all 3 credit bureaus. So if they don't have enough scores to go off, not only is it hard for you to get approved for things, but they also can kind of tell you don't have enough established credit. So that can definitely be a hindrance for you. So you want to make sure you have 3 scores. Now, the 3 credit bureaus are Experian, TransUnion, and Equifax. Those are the 3 credit bureaus that you want to make sure you have credit scores with. Now, not having established credit, which is basically, like I said, mean that you don't have either any scores at all with these credit bureaus, or you may only have 1, possibly 2. You want to definitely aim for 3. And especially for those who don't have any credit scores, I mean, you literally have no established credit. So there would be pretty much impossible for you to get any sort of financing from anyone. So it's very important to kind of start that process. And I'm going to go ahead and give you some tips on how you can do that. Now, with my personal journey, I'll be honest, I started where I didn't have really a lot of established credit at all because I had nothing on my credit, right? As a college kid, I didn't really, use my credit for anything. But, just growing and understanding how important that is can really kind of set you up for success, and even your children. It's probably a good conversation and things to start building on for your children, middle school, high school, teaching them about credit and getting them access to some sort of trade line, which we'll talk about trade lines as well. That way, when they're older, they kind of already have some sort of established credit, and then they can just keep building on that versus them having to start from scratch, or if that was you versus you having to start from scratch. So with not having established credit, here are some things that I had to go ahead and do to make sure that I was building on my credit and establishing credit. The first thing was trade lines. This is going to be a key and important word. Trade lines are things that are on your credit that you're basically paying on a monthly basis, but it's something on your credit that you are paying to show credibility. So the cool thing about trade lines is most people think of trade lines as just credit cards and things like that. But there's a few different trade lines that you can add to your credit to start establishing your credit versus not just having credit cards only. Definitely credit cards is one. I'll tell you now that is going to be one of the most impactful. The most important thing with credit cards or credit cards, of course, is making sure that you're using them properly and that you're not, you know, putting yourself in a hole and putting yourself in debt, because that can lead to a lack of credit utilization, which we'll talk about that later as well. So you want to make sure that a few tips of trade lines. You want to make sure that you either have credit cards that you're opening. You could have, now they have what they call like Boost. I know some of the credit bureaus actually now offer an opportunity to put even phone bills or utility bills on your credit report. So keep that in mind if you don't feel financially you're ready for a credit card just yet. Definitely look at those options. I mean, you can look at all three credit bureaus, Experian, TransUnion, or Equifax. Check out what they have and see what you can add to go ahead and boost that credit score. I know I definitely seen a phone bill as being an option, and maybe even some utility bills you can add, because those are things, let's be honest, that we pay on a monthly basis anyway that can really expedite the process in building and establishing your credit. So we're definitely going to go with either credit cards, phone bills, or utility bills. And people don't know, if you don't feel comfortable with getting a credit line yet, something that you're actually borrowing from a lender, you can certainly look at what we call secured credit cards. That is something I always recommend for people just starting the process of establishing credit, because it can also be harder to get credit cards when you don't have established credit. And that is one of the things that people run into. So last but most importantly, I'd say definitely look into some secured credit cards. A secure credit card is basically just a card that you're going to actually put your own money on. You're going to put your own money on this card, but it's going to operate like a credit card. So let's say you put $500 a month on this credit card or a secured credit card. You're going to use it a little bit a month, and just to make sure you're spending on it so that you can make payments on it every month, because if it's a zero balance, obviously you won't be able to make payments on it because there's nothing to pay. So even if you use it for something simple like gas, right? Let's say you don't even want to use much of it, right? Because it's your money. Or things that you're going to use it for anyway, bills, utility bills, small bills. Use it for that, and then what you're going to do is every month you're just going to make a payment. That's it. You're just going to make a payment as if you are paying yourself back. The cool thing about secure cards is that how it works, you're probably wondering like, oh my God, I'm putting my own money on here to pay myself back on a monthly basis. Yes, but this is going to establish your credit. But also, once it's all paid off in full, they're actually going to send you that back in a check form. So you'll get that money back as you're paying on your own money. But at that point, you should have some established credit, or at least working closely toward it. I would keep doing that secured card until you have it. And then now you can upgrade yourself to actual credit lines. Now, those are going to be my 3 tips for establishing credit. Definitely, when it comes to trade lines, you definitely want to make sure that you're either opening up a credit card or like putting a boost on your credit report. So whether that's utility bills or phone bills and adding those, or like I said, lastly, getting a secure credit card will really help you establish that credit. Now, outside of trade lines, one thing you definitely want to avoid is the delinquencies and late payments. Now, with all of those things on your credit, whether which one you pick, you just want to make sure that you're paying them on time, because I would say 30 days, they do report to the credit bureau. So anytime you're 30 days late on something, it is reported. Now, I will give you a little trick and tip and say that if you're late, but it's not like 30 days late, it's not reported. So you do luck up in that sense. But just make sure, of course, it's not 30 days late, and try to avoid like any late payments at all, just to be safe. Okay, so that's going to be trade lines. So once you have a little bit of credit established, one cool thing that I learned through my personal experience is I didn't really have established credit. So that is one thing I definitely tried, was the secure credit card option, which definitely helped me build my credit up. Once I got my credit to about a 620, I would say that's a really good place, between a 600 and a 620. That's a really good place to kind of start. You'll notice, because what'll happen is they actually track credit. A lot of these lenders track credit. You'll start getting mailings, right? You'll start getting mail from all of these different lenders for personal loans, credit cards, because obviously these businesses thrive off credit. The most important part is definitely you want to be educated on how you use credit, which I'll definitely make a separate video for that. But for now, I just want to show you how to build on your credit and how to maintain it. So one thing you want to do when you establish that credit, once you get to at least, like I said, that 620, you'll actually be able, most likely eligible, to go ahead and get a credit line, as long as all is well. And my first credit card, which I'm going to recommend to you once you get to that stage, is to apply with Capital One. Capital One has some really great credit card options, especially for new people who are using credit cards. I think their platform is very user-friendly as well. I have the app where it kind of helps me keep track of my credit. It lets you know when your payment is due. And it's super flexible, I think, for a lot of people with lower credit criteria, meaning people with like lower credit scores. And it really helps you kind of, build on your credit quickly and get approved more quickly. And I think for me, I was surprised when I got approved because I was like, oh, I'm only at a 620, right? Anything typically like 740 over. I'll even say 720 plus is usually a prime borrower versus like a subprime borrower. Where those prime borrowers get better, better rates, better things like that because they're more credible in lenders' hands and eyes because obviously they've worked their way up to get their credit scores higher to show they can actually manage to pay these things on time and pay them back. So you definitely want to check out Capital One. If you're already someone who have all your credit scores, but you just don't have good credit scores, like I said, I can't tell you verbatim what score they look at because I'm pretty sure it's a case by case scenario that they look at. But I would definitely say, if you get to that 600 mark, it definitely may be something in your interest to apply and see where you are. And if you get denied, it's no problem. At least you know where you are. And you can kind of get however many points that you think you should get, based on kind of the feedback based on their denial reasons, because they will send you a denial letter and tell you exactly why you were denied. But just off my personal experience, I just noticed once I got around like that 620-ish mark, I was able to get approved for my first credit card. I believe my credit line started at about, I want to say it was $500. No, actually it was $1,000. So I got my first credit line at $1,000. To me, I was like, wow, I was young, it was great. But this really catapulted my credit and helped me build. I noticed jumping from a secure credit card to an actual credit card, making those payments on time, keeping your credit utilization low, that really helped my credit grow tremendously. I would say that is probably one of the biggest things that helped me establish my credit was those credit cards and just not using them as much, making sure I stayed under their credit utilization, which we'll talk about next, but also just making sure that I paid my payments on time and things like that. And I was able to take my credit score from that 600 up to a little over a 700. I think I was at about a 714. Now, it did take me, granted, about 8 months because obviously I didn't have a lot of time, and that's important. They look at credit history, and that plays a big part. So you want to start getting these things now because a lot of people think that, oh, I could just get this card and then next month my credit will just spike. No, credit is a long-term goal. It's a long-term haul thing. It does build over time. So the things that you're doing, the good things that you're doing on a monthly basis is going to continually increase your score. So every month that I was making a payment on time for that credit card, my score was going up gradually, right? So it's not like one of those things where it's just like, okay, I'm gonna get 100 points. No, it's a gradual thing when you don't have established credit because you have to not just build your credit, but now you're building credit history. So now they need to see that not only are you credible, but you're able to build credit over time. So it took me out, like I said, about 8 months, and I was able to really see the impact from those points just gradually going up for me making on-time payments every month and establishing that credit. And like I said, within 8 months with me making those on-time payments, even with my secured card along as well, I was able to get to that 714, which is just keeping that good credit history and on-time payments, which is very important. Now that takes me into my next topic, which is maintaining credit. Here are some great tips to take down for maintaining credit once you actually have that established credit now. So once you have that established credit, now is when you want to do really great maintenance, right? We talked about a couple of things I slid in there, but now we're gonna go more in depth just here quickly. So when it comes to the maintenance of credit, you want to make sure that 3 things you are doing. I'm going to just hit on 3 things, although there's a lot of other things. I'm going to talk about 3 today. The first one is going to be probably the most important that I have analyzed, and that is going to be making on-time payments. Now, I talked about this previously on how I was able to spike my credit so quickly. And that is ensuring that when you do open those credit lines or secured or unsecured lines or whatever you put on your credit boost, phone bills, utility bills, you want to make sure that you're making those payments on time. Because when those institutions go ahead and report to the credit bureau, you want to make sure you're in good standing. I can assure you, there was one time where I did not make a payment on time, and it drastically affected my credit. Luckily, it was in the beginning, so I was able to kind of keep it going from there. But like I said, once you get to that 30-day late mark, that can be a huge, it's so weird, and so it seems unfair that your score goes up gradually but kind of slowly sometimes, it seems. But when you miss that payment, they will drop your points by a huge amount. I don't know why that is. Maybe it's because it's a 30-day late thing, but definitely you want to avoid late payments. You want to make sure that all your payments on time when it comes to maintenance in your credit. Now, some tricks I can give to you is that, let's say for instance, you're in a bind, right? A financial bind, and you're like, oh my goodness, my credit card is due, but I don't have enough money to pay my credit card bill on time within that 30-day period, or to pay these particular bills. As a new entrepreneur, I've definitely experienced this, and I can give you a tip and say what you want to go ahead and do if you are in a bind and it comes to that. You want to make sure that you actually take the money that you were going to go ahead and pay that bill with, pay your credit card bill, and then you want to go ahead and pay the bill off your credit card. Now, obviously, the goal is not to maximize your credit utilization, but that's just a tip in the case where you just are in that situation right now where it's just almost impossible for you to keep that going. But you want to do that until you get that stability. If it's like short term and you know you'll have money coming in, but you just need to get that payment paid, try to get creative and make sure you pay that credit card payment on time. And that's going to be like one of the most important things is on-time payments. The second thing is going to be credit utilization. This is a huge topic that actually I feel like is talked about often. But it just has to be reiterated because it plays a huge role in maintaining great credit. And that is your credit utilization again. You want to make sure that stays under 30%. Right? So a good way to look at that, right, is if you take, let's say you have $1,000 credit line, if you times that by 30%, you'll get $300. That just means that you want to make sure your spending isn't over $300 when it comes to make that payment. You want to make sure that you're keeping that right at that $300 mark. Even if you go over, you want to make sure you're making payments back on that card to make sure it stays within that 30%. Now, sometimes people say under 50% is good. That's fair. But if you want really good results in your credit, keep your utilization under that 30%. 30% or below. That is really a good place to stay. And like I said, you can always spend more. Just make sure when it's before payment time, before that new bill gets ready to cycle, you want to make sure that you pay that down, and that it's going to report as 30% utilization. So because you could spend $1,000 in a month, but you can make sure you make that $700 payment before, of course, it comes to your bill coming due. So you want to make sure that you have the means as well, obviously, to make that payment as well, which is why it's important to track your spending and making sure you're not overextending yourself and spending more than what you can actually afford to pay back. The ideal of credit is to make sure that you only are using enough as you are able to pay back. So that's something that I think we all struggle with. It happens to the best of us, but I can tell you one tip of keeping that credit utilization under 30% or lower will definitely help you. So definitely the maintenance will be a second thing. So on-time payments, credit utilization is going to be a really important factor. And one of probably the most important ones as well is you definitely want to make sure that you are keeping track of your credit report and avoiding any delinquencies. Now, of course, I think that's kind of common sense, right? If you start getting delinquencies that are reporting on your credit report, because you can have things that are not on your credit report, like medical bills, things like that you are not paying, but they actually report to the credit bureaus once they get to a point where they feel like, okay, this person is not going to pay us, so we're going to take a little bit more serious matters, and we're going to go ahead and report this to the credit bureau. You want to avoid delinquencies. If there's anyone that you may owe very small amounts, things like that, medical bills, you want to call and see what you can set up with them, whether it's payment plans, payment arrangements, or if it's not something that you think is fair, you want to make sure you dispute it as well. So that is going to be one of the most important things, is definitely avoiding delinquencies as well, and tracking your credit. In conjunction with that, when I say tracking your credit, there's a numerous of times, and I've even experienced this, where I've had fraudulent accounts. People who are opening up like phone bills and things on my account. Like, you would be surprised how people get your information and what they do with it. So you want to make sure that you are tracking your credit, and at least once a month reviewing your credit, taking a look at it, seeing what's on there, so that you can make sure that no one is putting anything on your credit that you are uninformed or unaware about. Because obviously, if those things are on there and you do not know about them, that is definitely going to hinder your credit. And I'll just be the first to tell you, with me having experienced a little bit of identity fraud with people putting phone bills on my credit, that is a process that you just want to avoid, because not only does it mess up your credit, but it takes so much work and so many tasks to prove to the credit bureaus that this was not you doing this. I mean, I had to file police reports with the actual police station, send photos of my ID. I had to send paperwork. It was so much, and it was so unfair, right? Because it's like, okay, like, I didn't do this. This is actually me. But I have to do all of this to prove that it wasn't. And so you want to just make sure you're avoiding any fraudulent activity in your credit, and that you're tracking it. And you're not just tracking it for fraudulent activity, but you're also tracking it to make sure that you are on the right page. One thing that really motivated me every single month with my 8-month run of building my credit was looking at it every month to make sure that I was on the right track. Every time I knew the credit bureaus would report my new credit, criteria after making those payments with my credit cards on time every month, I would take a look at it and just see how it was impacted and affected. And after seeing every month my score just gradually went up, that was motivating to me. That was motivation. So I'm like, okay, great. So what can I do to, spike it even more? So that just kept me motivated to make my payments on time, to keep my credit utilization under 30%, and to track my credit and make sure that it's gradually growing and that it's where I want it to be and it's headed in the right direction. So without further ado, I hope you enjoyed, family. Those are going to be my tips when it comes to establishing your credit and maintaining your credit once you have that established credit. I hope this video was super helpful. If you have any detailed questions that you have at all, or any thoughts or comments, please go ahead and drop them in the comment section below. And before you go, you are going to love it here. We are going to learn so much and grow and wealth build together. Go ahead and click that like button and subscribe. And I will see you in my next video. Have a great day, family. Happy fall season.